What's up guys, Chartsmith here. Welcome at the part of the video where I will explain the trade you've just watched. So let's start at the high time frame. As you can see, we have a range. This is our range high and our range low. We deviated the high once, so that will move our range a bit higher. Then we deviated the low and we deviated the low again, which can signal for a Wyckoff TCT Model 1 accumulation schematic. But that's not the only thing that is happening. If we're gonna look at where price is moving, we gotta draw our structure. This is our high, this is our lower low, this is our lower high, and this can be our lower low. Which can we expect after a lower low? A lower high. So, this Model 1 accumulation isn't confirmed until we break structure towards the upside. Where's the structure we want to break? Then we have to move down a time frame. This is the high you want to break for your confirmation for the price to move towards the upside, which as you can see didn't happen, and that's mistake number one. But why did you take a long trade, you may ask yourself? Well, the first confluence was this Model 1 accumulation schematic. I just never kept in mind we didn't break structure towards the upside. The only thing I saw was the third tap on the low, the big move towards the upside. But with this move, we also never broke structure. We didn't even hunt this high, which has to ring some bells of watch out, we're not ready to take out liquidity from the highs. We need more liquidity from the lows. But I oversaw that as well, unfortunately. The thing I saw was we came up aggressively, we came down, we made a new higher low because we left open this low. We made a SMT and we moved towards the upside. With this move, we made a gap. I wanted to enter the trade aggressively, so I placed my order on top of this gap, stop loss between the low with the SMT, and I wanted to target new highs because I was expecting that we are going to switch from here towards a new high, higher low, followed with a higher high. As you saw in the trade, we also took a add-on, which was this inverse over here. We saw that we came up, we hit our first entry, we came down, we left open a low again, which can signal we need liquidity from the highs. So we thought, yes, we have a golden trade in hands because, as I explained, we oversaw this. And then we made the decision to take an extra entry when we inverse this fair value gap. We wanted to order on top, stop loss between this low, and with that re-entry we had a total risk of 0.75%. We had an add-on of 0.25% risk. So let's discuss our first TP, because when you're in the trade you have to place a take profit, otherwise you're not gonna make money. We made the decision to place or take profit over here. Why there, would you think? Well, it's in confluence with filling up all our high time frame bearish gaps on the 10 minute, on the 5 minute. It comes in confluence with maybe eventually touching the order block and then get a reaction down. So it's just a first resistance point, you would say. But if you look at the 5 minute, you have this volume imbalance in confluence with the end of this 5 minute fair value gap resistance. So that should have been our first take profit. So we also made a mistake there. Then the trade, when a profit, loss, profit, almost hit our TP. Again, it came back after front running our TP. It disrespected all the bullish gap you wanted to hold if you wanted to keep price moving towards the upside. So we made a good decision when we disrespected all those gap, inversed the gaps, came back to our entry, and we market closed our trade on break even. At last I want to show you my journal for this account. So here's my Excel sheet where I journal all my trades. As you can see, The first trade on this account was a winner. Unfortunately, I didn't record the trade, but here's the screenshot. Maybe you can learn something from it. I will explain why my sheet looks like this and what the parts of my journal mean. On this side, it's the date of when I took the trade, with how many contracts I entered the trade, my risk per trade. I average around 0.5% risk on each trade. Here you can see my profits I take on the trades, the wallet after I took the trade, a screenshot of the trade so I can watch back what the chart and the trade look like, and my explanations for taking the trade, on which I did good, on which I did wrong, on which I can improve, the reasons why I took the trade, etc. So this is how I can easily track my trades, track my progression, and track the things I do good and I do bad. So that was it, guys. If you learned something from this trade, leave a like, leave a comment, subscribe to the channel, and follow me on this journey. See you in the next one.